In your view, does oversupply mean moderate or a sharp decline in the oil price? Because I think that is the big question. If we do see that oversupply in the second half of the year, what are we likely to see?
Yeah, so you see a sharp decline, let's say about $15 to $20, because the way it goes now is like demand has peaked. So what you saw between last year and this year is more of a recovery in demand. So, and the supply picture, US is pumping more. So it's just about what Saudi and Russia will do. And last data that came out for May just showed that Saudi actually crossed 10 million barrels. Russia also produced at the highest since last year, September. So there's also indication that US is actually talking to Saudi to actually increase its output to cover what Iran's sanction is, because the higher oil price is also bad for energy prices in the US, and that's an inflation risk to them. So we are going into this meeting, and everyone is expecting to see what will happen. Saudi actually reduced its compliance. But let's not forget that Saudi is over-compliant. So what they've done now, they're still above 100% because compliance rate is around 120%. So they've cut more than what they're meant to cut. So what will happen is they might just take the shutdown, because if you expect Iran's supply to reduce, maybe like 2 million barrels, then Saudi and Russia can easily take that up. But in the overall OPEC supply picture, it's still almost flat from what you compare. Saudi has a lot to gain from it. So if you look at the fiscal pictures of all the oil exporters, it's in a better picture now. Saudi has the Aramco IPO, and they need to really maintain it at that level. So I think you wouldn't really see any impact. Another part where there's a concern is the OECD inventory. So OPEC decision is to actually keep the current OECD inventory close to the 5-year average. But now it's about 2.8 billion is the 5-year average, and now it's about 2.9. So they've got into that level. And the question now is, will they continue to cut? But I think for this year, up to March next year, they'll still maintain our production levels. So what you might just see is a reduction in compliance level, maybe from currently is about 170% because of Venezuela, also Iran. But once that comes down to 120, but it's still, the market will move into a slight oversupply from Q3, Q4, about 100,000 barrels, because demand really has peaked. And that's where the picture is. But what you just see will be a slight retrace. So from 75, average crude oil price might go to 70 for second half, and then maybe for next year to be around 65.
But when you say the average comes down to 70, what would the spot price likely trend down to? You mentioned $15 perhaps, and that takes us to somewhere closer to, what, $60 a barrel. Do you get the sense that that is going to spark some panic in the market here in Nigeria? Because, of course, if that were to happen, that would be moving into an election cycle in Nigeria, and we do know that a lot of investors are concerned about that.
Yeah, so at between 60 to 75, Nigeria is in a better place. So there will be some reduction in terms of flows. But what we'll now be concerned about is like the reserves and also what foreign investors will be doing. But I think there's really no need to panic about 60 to 75, because that basically helps us. Our budget, I think the revision was around $50 per barrel. So we're still better in terms of the excess inflows we'll get from that. And don't forget that production has also peaked for Nigeria as a country.
Now, amidst all of this back-end play and power plays, OPEC still has to go and sit for those 3-day conversations in Vienna. What hot topics do you see being discussed? And when you talk about oil cuts, to what extent do you see conversations maybe degenerating? This is me getting ahead of the sitting now. Okay.
So the key drivers OPEC will be considering: one is geopolitical risk, 2 is Iran sanction, and also 3 is what the demand picture will be like. So that would be the 3 issues they want to consider. On geopolitical risks, it actually pays them, because what that means is that there will be some shortage in terms of supply. And so that gives them the dedication to actually just maintain where they are at current levels or increase their output in terms of compliance. So what we're saying is that they'll still maintain that output cut, but they might just have some guys actually falling down in terms of their over-compliance rate. Iran sanction means that maybe roughly 2 million barrels goes out of the picture. So OPEC will be considered about that too, and also indication of actually pushing it off. So if Venezuela comes back on board, Saudi Arabia actually goes back to 100% compliance, then that can cover the supply picture. So really, their own key indication will be demand. And because they also revised their forecast for demand. So currently, they don't expect a growth in demand in 2018. So because of that demand picture, they will be actually want to maintain that oil price, because I think Saudi will be okay, or Russia will be okay at oil price above 70 or between 65 to 75. So that will just give them the reason to just maintain that production cut.
So what does this mean for oil prices in the near term?
So in the near term, we will start to see some pullback in prices, because US is producing more. Oil rig data is actually up. inventory data are actually beginning to rise. And then also Russia and Saudi are actually increasing. So what you see now is that prices will start to trace back to the $70 levels. So definitely we're going to see some correction in prices.
But correct me if I'm wrong. I thought the agreement that they discussed before this meeting was that they would maintain the status quo till the end of the year. Yeah. So is there a prospect that they could change that, or are we likely to see a more clearer picture of what will happen next year? So
what they say is this how they maintain the status quo to the end of the year, but there's always a time frame mid the period where they can review the decision. Right. So that's what this meeting is about. So they can actually decide to go back to previous decision. So they have the committee that actually looks at the market and make a decision if they want to comply. So that's where the issue is. So if they decide to actually change, what I will mean is that from end of December, then they have to reduce their compliance. But at least for this year, they will definitely maintain status quo.
Guys, one cannot help but worry what this means for the Nigerian situation, especially when you consider the fact that we have a budget premised on exporting about 2.3 million barrels per day of oil, and then we have the force majeure in the Niger Delta, bringing our oil output estimations down by about some 7%. What does this mean for the Nigerian situation, where OPEC's forecast is not exactly as optimistic?
Yeah, so for Nigeria's situation, is just to actually look at the inflows. We definitely will see reduction in terms of oil inflows by first half of next year. But will oil go below 60? I doubt it will happen first half of next year. But what that will mean is that because we're going to start to see some reduction in portfolio flows, then the CBN will have to basically increase its own sales. And flows will come down. There's a possibility that we're actually going to face currency pressures next year after election. And what that means is that we will see the devalue. So I expect to see the currency at 400 by the end of 2019. But there's another side to high crude oil price. So we're losing most part of the gains we're seeing in crude oil prices from what we're losing from the under-recovery in fuel subsidy. So it's not subsidy, sorry, it's under-recovery. Right. So it's not like there's a money, but they're actually losing it from the revenue side. So what that means is that if crude oil price stays between 65 to 70 next year, they'll be forced to buy the billion to actually raise prices. But if crude oil price falls below 50, then they can actually maintain 145. Because currently, it's almost about a loss of, let's say, 40 billion monthly on the increase in crude oil price that we're seeing. So it's a chicken and egg situation for Nigeria. If prices go up, we're good inflows, but we also have to start facing some beats, because currently that means is that about 1 trillion will be lost every year, for the year, in terms of under recovery because of the high crude oil prices. So that's the risk you see next year. FX will actually drive PMS prices too. So there will definitely be FX pressures next year as well, as I expect.
Well, I imagine everyone can bet that nothing is going to happen with the fuel price until after the election.
After the election,
so
yeah, definitely.
We'll see what happens then. But then, let's take this to the market and get your perspective. Seplat was one of the movers yesterday. Do you get the sense that there's still huge value in that stock, even if we were to see a decline in the oil price?
Yes, there's definitely huge value. Seplat will benefit from high prices, but the good side of Seplat is they basically hedge most of their production this year. So it's above 50. So oil price up to 60 is still beneficial for them. I think a lot of investors are pricing in their half-year results. Last year, they actually reported a loss this time last year. So when you compare it, it's a strong recovery. And the fact is that they actually have improved cash. So I think the company will be paying dividend this year. And there's also talks about them bidding for Petrobras assets. They're one of the guys trying to buy the assets, and that actually will help them in terms of their earnings. So I'm positive on Seplat. I think it should actually touch maybe 900 naira before the end of the year.